2025 should have been the most explosive year for crypto, but then those dreams got shattered.
It's kind of the year where crypto underdelivered on price but overdelivered on the fundamentals.
Right, new regulation, the economy is relatively stable, the new president is pro-crypto, so everything is going the right direction. But then in terms of price, many people are disappointed.
The sentiment is almost rock bottom, but the prices are very high. What is happening?
Bitcoin reminded us that it's not yet as everything else and still have these wild moves.
It still has teeth, basically.
Yes.
When I think back to 2017, we were all so bullish, and the big banks and financial institutions were like, no, crypto, rat poison, stuff like that. And today, all the small guys are like, I don't know, man, maybe we should trade stocks, I don't know about crypto. The big financial institutions and banks are super bullish right now.
Bitcoin and ETH were more or less undervalued on both currently. It's very likely that the price above 150 is almost a given next year.
If not now, then when, you know?
Debasement is inevitable, but at the same time we also know it's inevitable long term that debasement hedges will go up in price.
Gold, moved in a matter of 1 week, the entire market cap of crypto. I feel like we have quite some tailwinds, to be honest. It's for me more likely that it surprises to the upside than to the downside this year. I think 26 might be the exact opposite.
Welcome to the Verified Podcast by Bitcoin Suisse, your backstage pass to the world of crypto. We host some of the biggest names in digital assets to cover the latest trends and share insights not only for your entertainment, but for the love of the industry. None of the discussed is financial advice, of course. It's all for informational and entertainment purposes only. So sit back, relax, and let's dive in.
Welcome back to Verified, everybody. We are closing in on 2026. It's another special episode that we do today for you because it sent us around our annual Outlook publication. This time with a slightly different expert roster compared to last year. Denis is with us again, our investment strategist. Then we have Luca Gnos, our crypto market analyst. And then also Matteo, some kind of our asset management wizard, our junior portfolio manager. We do a round of kind of rear view mirror to 25. What was surprising? How did it turn out? What did go well? What didn't go well at all? And then afterwards, obviously, we dive into our predictions, including our notorious price targets, obviously. Let's kick things off with Luca, I would say. Maybe you can tell the audience what was maybe some outstanding things or developments from 25. What was awkwardly surprising? What was positively surprising to you?
Yeah, so when I think back to, I want to go back 1 year prior to 2024 in the spring when the halving was. I remember that I wrote an article regarding the halving cycle for Bitcoin, the classic 4-year cycle. So if you look back at the cycles, 2025 should have been the most explosive year for crypto. And I remember going into 25 with the election in November and the pro-crypto administration with Trump. I feel like everyone was really excited for 2025. And I mean, things started off really nice, but then those dreams kind of got shattered. And I remember writing about the cycle and how August, September, October would have been the top if we go through if we would have followed the cycle. And now looking back at this year, it still kind of happened this way. So that was kind of interesting to me that we saw kind of a cycle top now over the summer and a correction towards the end of the year.
So you were saying the top is in?
No, because
because you said cycle top in the summer.
Yeah, I mean, for some things I'm not so sure anymore where we're going, but still, if we look at the cycles, 2025, the last year of the cycle would have been the most explosive one, and now we're basically flat on the year. So yeah, it just really makes me wonder how the next couple of years will happen. And for me, 2025, it was just a crazy year with a lot of narratives, a lot of things that were really like short-lived. We had the memes beginning of the year with the Trump coin, just like went down the hole, and then with the perp decks was another narrative, and then privacy coins, just like a lot of topics that lived for a couple months and then
short-lived, yeah,
really
hype,
short-lived, and a lot of hype and not a lot of actual like long-term narratives that really sticked around. So it was a difficult year for me, and I feel like for many
most market participants,
retailers
probably.
like me, like the small guys, I feel like a lot of people have lost hope, and let's see, I feel like after these episodes everyone is probably a little more bullish again, hopefully.
Okay, fair. What about you, Dennis? Would you like mostly agree with that view? Or
I mean, Luca said I have to bring in bullishness now for the rest of the episode. I mean, it's right that the year sort of disappointed in terms of price performance, but I think that's also because a lot of other factors over-delivered, right? Fundamentally, we spoke about it also some time ago, the crypto market got pretty much everything it wanted, right? New regulation, there's easing in the economy is still relatively stable. The new president is pro-crypto, the new SEC chair is pro-crypto. We now have a most likely Fed chair coming in that's also pro-crypto, so everything is going the right direction. But then in terms of price, many people are disappointed, which then I would say, well, from a bottom of roughly 15,700, roughly 2.5, 3 years ago in the bear market, we went up, what is it, roughly 8x almost in terms of price. We have been trading above 100,000, above 6 digits for more than half a year, which has been very bullish. So it's been also a very non-bullish bull run so far, right? There's volatility at an all-time low. We know the prices were at all-time highs for very long, very stable. I mean, I just calculated it recently. We also put it in the Outlook report. There's been more than 400 billion in net sales pressure have been absorbed for Bitcoin throughout the year by, as you mentioned, right, long-term holders, short-term holders. So overall, I would say it's fairly bullish given all the dynamics that happened in the market. And if we now zoom out a little bit on the general dynamics, right, fundamentally on the crypto side, everything is bullish and looking more proactive for crypto. And on the macro side, we just come out of a, let's say, rather shaky and tightening regime out into a now more accommodative regime. So everything is shifting more bullish while we're still trading within 10% of a 6-figure digit mark, which 3 years ago in the bear market, no one would have believed if you told them, hey, Bitcoin is going to trade 6x from here stably for more than half a year, and people call that a bear market. I would maybe disagree.
I guess just to mention one thing, you mainly talk about Bitcoin, and I mean the best thing one could have done is just hold Bitcoin, but yeah, I was looking at it more from a...
On the out season, it definitely
not really
delivered.
I guess that's the gist kind of, because like Bitcoin did quite well, and deriving from how the overall crypto sentiment is, you can derive that most people were like heavily exposed to altcoins that did not really do well. We framed it in the Outlook in the preface as it's kind of the year where crypto under-delivered on price, but over-delivered on the fundamentals. You outlined many of these fundamentals already. More crypto-native view is also the scalability, the tech stack improved again, like quite substantially. I feel like in terms of scalability, we are now at a point where we can actually quite handle a lot of block space demand. Also, if you think about the liquidation event from October, of course, there were some hiccups in terms of like how perps handled everything, because there were like ADL, just to name some terms, the ADL and things like that. But the fees still were quite low despite this like high volatility impact. Then I thought it's quite cool to see that there's a renaissance in terms of more focus on privacy again. It becomes more and more important as AI deepens its relevancy in all of our lives. So at some point it might become really important to have like very sound on-chain ideas and things like that. Aside of that, obviously AI will mostly trade on crypto rails and will not open up a bank account most likely. Let's see if there's some form of AI KYC that you can come up with. But overall, I think I would like fully agree with what you said, that many people, many market participants were like largely surprised on how the market turned out. Maybe also this like 4-year cycle was front ran to some degree, because we also had this, what was coined the crypto's IPO moment, now breaking this psychological barrier of 100K, where now then many long-term holders stepped in, started to de-risk, basically distribute from their Bitcoin holdings. And then the fact that, there wasn't really like retail mania. We had like just a few pockets of hype, such as memes, but they died out quite. So there were more like selective pockets of like good performance and then bad performance afterwards. Overall, I guess since we didn't see like a major blow-off top, we didn't see like a major retail mania, because it was all maybe liquidity soaked up by this gold rally, AI, and then liquidity that could have rotated into altcoins ended up in DATs. And I think since there was no like blow-off top, no mania, I think it's reasonable to argue there might not be a capitulation to the downside, because who is panic selling, kind of? Yeah. And then, I mean, we just had a 30% roughly
maybe
correction.
This is the capitulation. I feel like a lot of people.
It can also be like a capitulation that feels way softer than anything before. I think it's a reasonable way to subscribe what happened in 25, but maybe also from your view, Matteo, you're looking more deeply into funding, into options markets, into perps, into like how markets, what happens behind the price, kind of. Anything like that you would like to share with us, like any like cool developments in 25 that you saw, anything that excites you, that you could that you also maybe then integrated into some of your strategies?
So maybe first of all, I want to mention a couple of things regarding like 2024, 2025. The average Bitcoin purchasing price is around 90K, meaning that actually is even higher, like 95, meaning that we are already below that level. And the next big chunk is around 74. Those are like 2024 buyer, right? So if we consider this type of levels, we know that we can consider being still on if we keep that threshold. So if we don't go below that level, I'm still feeling quite confident. Still, regarding more indicators, let's go with very basic one. Looking at fear and greed, you had values that you haven't reached for a very long time, like 2-3 years. Basically, it was 2022 when the greed sentiment was that strong before the latest drawdown. So it has been kind of a mess in the last month. Otherwise, I would have been said that everything went as planned. I think with Denis and you also, I mentioned also previously during the year that Bitcoin was kind of the SP 500 of cryptos and start behaving a little bit like that, where you can expect a slow growth drive basically by out of the money call option, for example, creating this gravitational zone where the price tends to aim. And then this type of narrative went very well until the very last weeks. And also for the volatility forecast of last year, it was fully notched, except that we did the evaluation before the very latest drawdown. So the interesting fact is that somehow Bitcoin reminded us that it's not yet as everything else and still have these wild moves or somehow something breaks and then you have a sudden 30% drop.
Yeah, it still has teeth, basically.
Yes.
Kind of.
Exactly.
Yeah, that's a good point, because maybe like worth mentioning, in the last outlook we called for both like new all-time highs while also lower volatility, and this is kind of I don't know, a very bold call, because usually it's you get like sharp upside that goes along with like high volatility, but this is also like just showing or demonstrating again like how institutionally driven this cycle was, where the flows were mostly, the buy side was mostly stemming from ETFs and these DATs, and not really maybe from the retail sector that directly purchased spot crypto assets. I think it segues quite well into 26, and because you mentioned option markets, there was one prediction now in the new outlook that I liked a lot, where like 100% subscribed to, which is that with this like maturing market, we will also get like a substantial pickup in options activity. Maybe what's your view on options markets like heading into 26 in crypto?
Yeah. Yes, we have to take in consideration that there is a huge part of it that takes place OTC, so that is more difficult to monitor. And now with the ETF, as we previously discussed as well, now the trading volume is basically as high or very close to the one is on Deribit. So there are multiple sources of it, and then there is a question if you consider the ETF really crypto native flow or not. But for the sake of the prediction, let's stick to Deribit. Compared to the last year, it almost doubled. And it was a kind of a surprise, because in the previous years, it didn't have that spike. So I think that options are really the main gateway for institutional player. So the enhancement of this market sector is key to have more stable and less speculative type of capital. And that's also one of the main differences that Bitcoin has compared to all the other alts. ETH is the only one that has something similar, but still the volume is not enough to guarantee the same type of behavior. And so the growing option market has to deal with the very strong volatility that options have. For example, as I mentioned before, like there are still possible this type of breakdown that can somehow scare investors, like institutional investor, right? Because the 40% drawdown force you to, let's say, roll over your position or even close them. Still, I really think that the way to go is a set, and more institution will come in, meaning that this will bring new flow to both Bitcoin and Ethereum as well.
What about altcoins? Doesn't this, if only Bitcoin and ETH has like maybe a sound options markets and some like more sticky activity, like isn't there like a major opportunity to price altcoin options, or how is it working right now?
Absolutely, altcoin option, in my view, is one of the most profitable sector that we are having now, because Deribit works a little bit as a fair valuation of the option. Then we can argue about that, but it really works. While for all the rest, they are so liquid that basically everything is OTC. And so there is a huge spread between bid and ask, and there is where the real money is in. And those type of opportunities usually are really attractive for kind of more sophisticated investors and providers. And that's also why I say the tendency is set, and we are going to go closer to the TradFi world, where basically option make the part of the lion among the other assets, right? And that obviously can also have consequences on you, Luca, as a retailer, because
I was wondering
if investors come in, let's say that it's difficult, at least on those major coin, having that type of returns. Now all of the sudden, the retail investor has to shift to smaller caps where it's difficult to write options, and then the major asset remain under the more institutional player.
But do you think like retail investors, individuals will also start trading crypto options? Because, for example,
I hope so.
On Robinhood, there was a huge increase in option trading. And I mean, Robinhood is basically a retail platform.
But maybe with the perspective of like what there were similar approaches with crypto native options protocols and what it tried to do, because especially the retail side, and that, for instance, also includes me. I feel like once you interact with options, you are quite on the more sophisticated side, and for a retail player, I don't know, it's quite tricky. So, and what Robinhood is doing, as I understand and as I saw, they very almost oversimplify how it works in order to trigger the retail.
More like a go up, go down scenario, but no risk, and not that you're trading synthetics in most cases even.
Yeah. I think that when you trade option, you're trading volatility. So it's a different level of complexity regarding price goes up or price goes down, because obviously, if you just sell call option, then okay, it's kind of okay. You just wait for the price, but then there is still, how can you stomach some volatility swings? Are you going to roll over? Are you going to close it? On the long vola side, it's even more complicated, right? Because if you want to be profitable in that regard, you basically have to dynamically hedge, and every time you have some discrepancies between the delta of the option you have and the underlying asset, then you rebuy or resell to readjust that hedge, and you get that spread. So that's the way you do money, but it's kind of difficult to get for a retailer, but also for someone who knows, it can be like me, but you really have to have some automatic trading. You need to create a bot. You need, I don't know, a 24/7 operating mechanism, because crypto are also 24/7, right? So there are all this type of components to take into consideration, and I'm not sure if the retail are gonna pick up. If there is a space for them, it could be with the perpetual options that I also mentioned in the prediction, right? They haven't really picked up yet in the volume, but there were a couple of interesting news in 2025, and maybe they will have the same spike that Deribit had during 2025, and they finally pick up. And maybe in that regard, you can see more volumes. But I don't know. You're playing with a different level of investor when you enter in that type of market that can be
for sure
sort of dangerous, right?
I think what people waited for in 2017 or 16, waiting for the ETFs. Now ETFs are here, institutionals are here, and the dream happened or happened not. Everyone's trading paper Bitcoin. Volatility is at all-time lows. So it's also a dual-edged sword, right? Not what most at least early Bitcoin
be careful what you wish
crypto
for.
punks wished for, right? Yeah, that's true.
I mean, if you're gonna trade some more altcoins, you're gonna get exactly what you had in 2017, 18 in those type of assets.
Still a similar profile. Speaking about volatility, you know what's also pretty volatile? Prediction markets. For instance, they can swing from 10% to 100 or 90 in a matter of minutes. Just recently, for instance, I had some exposure like approaching the Fed decision. And turned out I was on the wrong side eventually, unfortunately. But prediction markets, I feel like 25, they really crossed into mainstream relevance. Even after US elections, they are trading at new all-time highs in volumes. New player gained a lot of market share, which is Kalshi. It's now dominating the volumes, which is interesting to see. I think it's cool to see one of the few products that crossed into the mainstream kind of awareness and that has user retention, where people are really excited to put their money into some of these markets. It's nice to see. But there might be like a major change ahead in terms of dominance. You have quite a strong opinion who's like turning out to be market leader at the end of 26, right?
Yeah, I mean, when we look at the two big players, Polymarket and Kalshi, they have together over 95% of the volume of prediction markets, and one of the big differences is that Polymarket is basically offshore and Kalshi has a license in the US and has been really active in the US. They have a huge market share in sports betting in the US, and the US is a huge market for sports betting. And also when we look at the numbers, almost 90% of the volume on Kalshi is from sports betting. And when we look at Polymarket, it's a lot more distributed. Kalshi is currently in the lead when it comes to volume, but mainly due to the sports betting. And in all other categories, such as crypto or politics or economics, Polymarket is actually still in the lead. And basically, our prediction is that once Polymarket enters the US again, which is actually due anytime soon, when we look at the prediction on Polymarket, whether the Polymarket will launch in the US in 2025. We're at 80% right now, so it looks like this will happen rather soon, and the beta app is already out, and it's among top 3.
Yeah, and the approvals are also done as
Approvals
they
are
teased
done.
or shared on Twitter or on X, sorry.
Yeah, no, exactly. So
Still not used.
the entry is imminent, and we believe that it will be a lot easier for Polymarket to gain market share in the sports betting market in the US and keep its lead in all the other categories. And it's just more difficult for Kalshi to actually gain market share in the other categories.
Do you think it's going to be a duopoly like we address with the stablecoin dominance, right? Tether and Circle, because just this week, I think the CFTC also granted the license to Gemini for prediction markets, so they have none, but they would be allowed to enter the market. Do you think there would be many players, or do you think it would be, as Matteo mentioned with the options, right? There's one dominant player, they have 80% market share. Do you think there will be more players even?
No, there will for sure be more players, and also a recent development is that Robinhood actually also announced that they will enter the prediction markets game. And when you look at Kalshi, what's really interesting is that over 50% of the volume on Kalshi actually comes from the partnership with Robinhood users. So maybe the war of the market share in prediction market is more between Polymarket and Robinhood, or maybe even some other big player. DraftKings is a big sports betting firm in the US.
I mean, just the more traditional players.
They're also looking at prediction markets.
So you're telling us that the retailers went from crypto to degenerate betting on politics. That's what you're telling us.
I'm speaking from my own experience. I'm a retailer. I was in the meme coin trenches. I traded perpetuals on DEXs, and you know what I'm doing right now? I'm only on Polymarket, and I'm betting on crypto prices on Polymarket. So I'm not trading perps anymore. I'm basically on Polymarket, and I'm trading everything. And honestly, it's just so much fun. And I mean, with Polymarket, what I feel like is really interesting is that we now have an application in the mainstream. Everyone is talking about it. Even like a press conference between Trump and some Saudi prince, they were talking about Polymarket. So there's a crypto application in the mainstream. Everyone is using it, but they don't have a token. You know, it's like
but they will have a token.
The youngest billionaire in the world is the founder from Polymarket, or now the founder from Kalshi. I think she entered as well, but they don't have a token. And as Dominic said, Polymarket, the token is coming, and that's for me a really interesting play. Also, farming a little bit on Polymarket.
Yeah.
So in the hopes of an airdrop.
Some volume might then also take the Polymarket volume still with a grain of salt. Yeah. While Kalshi's volume might drop by 50% as Robinhood enters with its own solution. Polymarket's volume might drop after the token
We are
launches
hooked.
as well.
We are hooked. We're never going away.
But I think the broader use case penetration will still come, because I think a lot more sophisticated investors or institutional players are actually going to use it as a hedging tool.
Yeah.
It's sort of an actual future/option on certain economic events,
it's
political
incredible.
events. The sports part is really, hey, can I make a return? Maybe it's fun. As you said, it's a bit of a entertainment versus risk and return. But really hedging on, hey, if I have a business and I would suffer under, let's say, tariffs or some new tax increase, then actually I can go on Polymarket, bet against that tax rise, or maybe against new tariffs coming in. And if they would come in, at least someone could make a payoff of that while suffering somewhere else and sort of hedging their returns that way. And I think that part will be even bigger than the pure betting or prediction market. I think will be more of a hedging market even.
And you will be able to do it on the Nasdaq exchange, not on Polymarket.
And on bigger tickets.
Yeah,
not the $10 and 100
it will be
out,
integrated in the big.
Actually, what I want to mention is that when you bet on yes or no, you are actually buying or selling a call option. So that's
yes, you're doing.
Yeah,
that's
so
it's also like
it's still option trading.
Very strong parallels to options.
So there's an easy way to understand options, as you said
maybe.
initially.
Or like it's where the retailers can trade them.
I guess.
I had a question for Luca. Have you ever tried to do arbitrage between the two of them? I guess it's not a secret that there will be some discrepancies.
Yeah, no. I mean, not between Polymarket and Kalshi, but between Polymarket and Myriad, another smaller one. There's also some other smaller prediction markets in the crypto native space.
Yeah.
So yeah, there's some possibilities for sure, but I
guess
not for
outside of Kalshi and Polymarket, there's just like very constrained liquidity. So depending on your ticket size, it's quite quick that you end up in too high of a slippage and stuff like that.
No, for sure.
But I guess the overall the potential I feel is huge. The total addressable market is like gigantic, and that's probably why Robinhood is also like strongly embracing this field right now. And let's see. I think it's something that will just get stronger from here, and maybe we see, as you said, like it becomes even even deeper the relevancy of these markets, and it might be also become even more embedded into our everyday lives. Maybe it's at some point on X, for instance, or on your media, on your newspaper side. You have a headline and you can bet alongside. Maybe, who knows? So there's a lot of volume coming in on Polygon then, because that's where Polymarket lives right now. One thing that I would highlight maybe is I still believe they need to figure out their Oracle solution. Maybe the token can help there. I know they are also looking into Chainlink right now. For instance, there was this case with Zelensky, if he wore a suit or not. Clearly, it had, like in my opinion, it was like still a rigged outcome. It ended up being no, while like basically the consensus was that it was yes. But then if like the holders from Yuma or whoever has like a large stake in Yuma is on the opposing side, then you kind of get a I hope they will fix this.
Yeah, there were many cases like that.
Yeah, and then
sources of truth matter for that.
Exactly,
aspect,
yeah.
Yes.
And then another one is basically that, like being very precise on how you define the outcome, because there you also like sometimes you feel like the Aztec funding round, it was not in the fine print on how they described the requirements to for the outcome as a yes or no. It was not 100% clear.
Yeah, or they even, like for the Monad FTV, one day after launch, they changed the rules afterwards.
Yeah.
And then
so
it's just
there's some improvements to be made. Again, unfortunately, I was like on the wrong side with the Fed decision. But I think the Fed will play a very big role coming, like heading into 26. We expect a new Fed chair. I think you mentioned it before. One call of us in the new outlook is that we will see a non-consensus reduction in the FFR, basically down to 2%. I think with that it's reasonable to head more into what's happened, what we expect on the macro side. Maybe Dennis, what do you think? Is it like reasonable to call for the 2%? What are the mechanics at play with Hazard, with Trump trying to gain some influence, and also what does it mean in terms of liquidity and stuff like that?
Yeah, no, it's many good points, and I do believe the Fed will actually play an even more important role than it did, for example, this year in the markets going ahead. And reasons are manifold. So of course, everyone knows at this point it's almost certain that Hazard will be the new Fed chair, and he's also pro-crypto, and he might then take the chair in April. So roughly hold out another 4 months, and then all hell breaks loose, right? We get the interest rate cut to zero in a couple of weeks, as Trump would promise, and there will be QE. That's of course not the case, but there is very good fundamental reasons why. I mean, coming from now a federal funds target rate currently of 3.5 to 3.75 percentage points, which is now priced to hit 12 months from now only 3%, right? So only 50, maybe 75 basis point cut. And there's good reasons why we can actually say, well, whether it's 2% or not, but it will be very likely lower than that. And that's not only that there's fundamental economic strength currently, the economy is stabilizing globally. Yes, there's softness in the labor market, and we also see inflation is above target, but we see those trends stabilizing fairly well. So we're not really heading the car straight on into a wall of recession. That's unlikely to happen. There will be some volatility. But going into 2026, what we can definitely observe, and you also always open up the crypto and debasement trade globally that's going on with the topic of what are deficits globally and how high are they. And the US is really on that brink of achieving almost 130% of debt to GDP. Maybe it's a milestone, yes. But they are currently running at a 6% deficit to their GDP, and just on outstanding debt, they have to refinance $9 trillion in US debt next year. And whether you refinance that currently at around effective market rate close to 4%, or you bring that down to 3 or slightly lower, that's going to make a big dent in the budget of the fiscal budget in the United States. We also know there's spending bills upcoming, right? Trump's big, beautiful bill, which you could say has good fundamental reasons for the economy to also run its benefits, but at the same time, we're again indebting the economy or the government even more in order to run the economy hotter. And all those requirements and liquidity drivers in the economy, they require lower rates long term. Plus now going from QT to QE, of course, in December doesn't mean the money printer is on, but already stabilizing some overnight reserve markets and rates. They already start to now buy back roughly 40 billion in treasuries monthly, which of course is not the same as printing. We spoke about it earlier, right? Not like the money printer is on, but we are already transitioning to that easing scenario, and rates will have to come down for that in order to...
Yeah, and as I understand, the balance sheet expansion will be a little bit slower, and compared to some like maybe more substantial QE that we saw previously, as I understand, it's also they are trying to take out less duration and basically buy more like on the bill side, basically. What does that mean? Like, how is it then different in terms of QE that buys like long duration bonds and QE that buys like more on the short duration side?
I think zooming out from that, the easier way to understand it is compared to what we then also call the two concepts, right? The global M2, so fiscal spending, but also some general expansion in the broad money supply, versus then the global net liquidity, which is what we saw rise really during the COVID crisis and aftermath, which is really central banks actively buying assets. They actively buy treasuries, therefore really actively issuing sort of new liquidity to financial players, and hence asset prices rise. And what they now do sort of is also what you mentioned, right? With a bill or treasury issuance, you could think about it more as people actually buy from the Fed, so they're actually contracting liquidity in the system. But what they then come to do, and that's then what I mentioned with the overnight reserve part, is they then really take that collateral, which now is backed 1-to-1 from the Fed, and they say, anytime you give it to me, basically, we're going to give you the full cash face value back. What they do is they put it back to the Fed and borrow against it. So on the one hand, you're contracting the liquidity, right? But then players and financial institutions go out there and they borrow money against their collateral from the Fed at the Fed, therefore again slightly increasing liquidity, but it's of course more of a secondary and tertiary effect, and the Fed knows very well that it's going to have an easing effect, but they're not going to call it money printing or QE, because that would of course run the markets too hot again. But the dynamics is the same, just to way lesser effect, because it's further out the curve of how directly does this liquidity flow into the system and drive asset prices.
So the epicenter of financial plumbing, kind of.
Almost. I mean, there will always be a new way to finance debt, to issue liquidity and currency.
Yeah, you mentioned that the economy is doing quite well. I feel like we can, to some degree, take all of the tech giants' earnings, Mac 7 earnings, with a grain of salt, because they are like kind of, funding themselves, kind of in a circle kind of fashion. So I'm wondering, because there's also some, especially on X, many of the big accounts are quite vocal about this like K-shaped economy, where you see. Where they print basically the S&P versus consumer sentiment, or you can also use other indicators.
Or hard data versus soft data.
Yeah, where you also see that what we saw now in retail is very, very muted. It feels like retail does not do heavily well, kind of, because the sentiment is like almost rock bottom, but the prices are very high. So what is happening?
Yeah, it's hard to say it, and it's also hard to not maybe put a label on it. But what you say is very true, right? On the one hand, economic data are okayish, stocks are at all-time highs, but as you said, the general retail sentiment is quite bad. And I think just recently there was also a survey in the US where they asked, where do you think stock markets are currently trading at? And I believe it was something like 70% of people said it's not at an all-time high. We're currently in economic turmoil, whereas from gold to stocks to now silver, everything is running at an all-time high, and yet 2/3 or roughly 3/4 of the population in the US think we're not at all-time highs in the markets. And that goes in hand with what you said, right? Retail sentiment is depressed. We feel that also in crypto, especially on the sentiment side or on the retail activity. Yet if you look at things like retail spending, it's actually rather stable and even slightly up on the year in a lot of categories in the United States. So while people are spending more, they're saying, well, but I'm worse off. And you have to ask yourself, why is that? Is that now maybe wrongly displayed by the media? Is there other fundamental reasons why they're maybe less happy in the economy? But I think if you then zone out a little bit in terms of more deregulation coming, fiscal stimulus, of course, or helicopter money is not great for the economy long term, but there's a lot of factors also coming that are going to uplift now sentiment and retail participation in the economy, from deregulation to tax cuts. I think that can also very quickly shift to the other extreme, right? People thinking it's better than it is, while they have to wait for the bill to come maybe half a year down the line.
Okay, so it's kind of the perception is that it's like a little bit worse than it actually is, maybe.
They feel worse than it is. It's actually better than most people think.
Yeah, I think one part that many people, or as we outlined earlier, a lot of crypto market participants were somewhat catched off guard. Maybe one reason was, if you think about I don't know how their shop is called, Raoul Pal and their research analyst. Global Macro. They keep like sharing like how Bitcoin usually correlates to the global M2, and this like completely decoupled.
Did you see the chart lately?
Yeah. So there seems to be
that's a major
shape. A huge jaw.
Yeah.
So for many months we had like an almost perfect correlation, but now crypto kind of decoupled to the downside, and interestingly both tech equities and gold decoupled to the upside. So I think there is some form, maybe the M2 did not translate into real liquidity yet, what you were like elaborating in the outlook, but like heading into 26 again, do we feel that this jaw is closing? Will crypto catch up to the trajectory of the money supply, and maybe will gold and tech equities come down a little bit, or will we continue that journey?
That's a good question, because obviously we are also on that train saying, well, global liquidity, money expansion, but also the actual net liquidity, net asset purchases of central banks, they're driving crypto prices. So you always have to ask, why is then there certain disconnects in the meantime? For example, net also over the year, why are we flat on Bitcoin if we saw a net ETF absorption of something like 26 billion over the course of the year? But then also behind the surface, we see, well, cashing out, there was roughly 400 billion in sales pressure, so it maybe makes sense. What then I would say in terms of that general disconnect would maybe also link to earlier topics such as the 4-year cycle, halving cycle, and whether maybe the cycle even broke in a way that this year was sort of a hidden bear market year, and you could even say it's not even a hidden bear market if the stocks indices like Nasdaq, S&P, they're up 20%, gold 60% on the year, silver now even at 100%.
Incredible, yeah.
Everything doubled, and here's a crypto investor that broke even over the course of the year. Wouldn't you say that's a bear market by definition, almost in compared to relative asset class performances? So will we see that correlation rise? I think definitely now that we see easier monetary and financial conditions upcoming, and also the actual net liquidity or QE increasing again. That this M2 correlation broke entirely, I think that would really be more due to actual fundamental reasons, such as heavy redistribution, right? The long-term holders exiting their positions, some reshuffling and redistribution throughout the year, and maybe also some of the earlier parts we spoke about, right? With the election and some bullishness maybe taken away up front already, that there was not much steam to be left. And I think you mentioned it, right? That whole AI trade, it's simply very strong. So why go to the so-called altcoin casino or the crypto markets as back then if you're going to make double or triple digit return on gold and tech equities?
Yes.
Maybe one small thing regarding that. It was the start of the year. I presented some heat maps regarding like correlation across different asset class, and gold and BTC like were going in the same direction somehow. In the latest year, they were more correlated than in the previous year. But then I think that Chinese government buying so much gold kind of trick the overall conclusion, or like
it strengthens the narrative. Yeah.
Yes, but actually during this last period, like the Chinese government bought so much gold that the price went up artificially almost. I'm not saying that it's a bubble, but actually the return that gold investor had during the last year, it's somehow
tremendous.
The 1st percentile outlier. Basically.
Yeah.
Yes.
My grandpa is pretty happy. He's one of the these gold bugs.
Finally, they get their revenge on all those crypto investors.
Maybe another interesting like add on this is Tether or stablecoins were also like a major substantially fueling that rally. Tether, for instance, was the largest marginal buyer of gold in both Q2 and Q3. Bought more than any other central bank.
They're also
who was buying silver then?
Biggest holders as well.
Yeah, it's insane. Like Tether is like they are like
banks and then Tether.
They are to some other banks. They will say your size is not size.
Yeah,
kind of. It's insane.
Paolo bought the wrong gold. Right.
Yeah, maybe. But they also have like substantial BTC exposure.
But what about silver? Did someone purchase that huge amount? Because gold has a very strong narrative from the government purchase and
I think it's silver in terms of performance is almost on par now. It like from a narrative view, it's usually behaves similar to Bitcoin and ETH. You know, it's kind of a beta play usually but now with the debasement trade. Then it was also heavily fueled by retailers. Remember the pictures across the globe where they had huge queues in front of like physical bullion shops where everybody is buying gold kind of. So it's quite a crowded trade.
I'm just saying that gold and BTC had a very high correlation for 2024, and even when there was the drop for the tariffs announcement. Gold and BTC performed even better than threat.
Yes. I remember that as well. And it makes sense, right? I mean,
absolutely,
Bitcoin is the digital gold, kind of.
But then I got puzzled during the very last weeks because gold had a correction somehow, but then went back pumping. Bitcoin
I feel like we are dealing with a huge basket of anomalies right now. With like... everywhere is like things are decoupling, like the correlation breaks down. I think maybe 26, it has to be a year where things return to normal again, Bitcoin. I mean, you also have to think about how our portfolio is positioned with gold. There's such a strong argument. There has to be like some rotation of these weighted gold portfolios now into Bitcoin, for instance. But following up on what Denis said, with the more macro view and how markets potentially develop in 26. Do you agree from a position of like how are markets positioning for the next couple of months in terms of like options and perps? How is that looking like through your lens?
So regarding always crypto, right? Or
sure, I mean that's
yeah.
You can also like
because
Beanie Babies also fine. Or how are these new plushies called?
Labubus.
Also fine.
My
how's the accumulation there?
Yeah.
My dad bought me one when he went to
really?
China. Yes.
They are in distribution mode now.
Yes.
Potentially.
I mean. Yeah. Anyway, the real topic is here when spot moves in with a certain intensity, option market becomes irrelevant.
Mm-hmm.
So that's what we saw. I think that for the next 2 months, if we are not seeing a big liquidity injection, we are still seeing some choppy markets.
Mm-hmm.
The open interest are kind of concentrated between 110 and 75.
Mm-hmm.
And I had a nice conversation with Denis 2 weeks ago. Because the previous month where the price was around 105, there was like protective puts around 75.
Yep.
And then 3 weeks ago, when price went down to 85, you see that the protective puts actually were still at 75. The open interest, the big chunk of open interest remains still. That's why also we called a kind of a rebound for the very following months or for the very following weeks, or at least let's say that the drawdown was somehow completed, at least for the moment. Now, I haven't checked in the last couple of days the open interest over there, but they are a good indication during, let's say, normal period, and they can work as gravitational points during normal periods. Then if there are very big news, Trump election, tariffs, then obviously everything blows and follow the spot. But then it converges back to be in the normal standard. So looking at open interest, it seems that if we don't have any very, very big news, and that is a big if with the guy at the White House at the moment, sometimes he wake up and decide to do some money or to destroy some money, or whatever. If we don't have any big news, I think that this choppy market continues
continues. Okay, so the markets are telling you they are waiting for a catalyst, kind of.
Yes, the open interest is
more
pretty
direction
much,
again.
yeah,
okay.
It's concentrated in that interval, like 75, 100, 105. That is where we've been most of the open interest.
Yeah, yes. Fair enough.
Let's talk about price targets. Denis?
Price target.
Yeah. Reading the numbers for the end of the series and then send it out. No, but I mean, in terms of price, I think that's something also right in terms of our predictions. Did we hit it or not? Where we set directional calls, the overall narrative and dynamics of the market more or less spot on. But then the flight altitude, I think you called that quite nicely that way, Dominic, was definitely not hit right. I mean, setting out the target of, look, floor price 150,000 for 2025, and then approaching that peak of 180 to 200,000. We're currently far from that, right? We're currently half of that price target. But going forward, I mean, if you look at a lot of valuation bands, a lot of valuation parameters for Bitcoin and for ETH, we're more or less undervalued on both currently. So maybe looking more in detail into Bitcoin, what we see in terms of general risk, cycle dynamics, it's certainly more skewed to the upside and hints that long term, yes, you will go higher, whether that's now in the next month or over the next weeks. That's of course not defined by that, but going then hand in hand with the general narratives in the market, right? We know easing on all fronts. The crypto fundamentals are already strong on all fronts throughout the year. We still stand basically by that target saying, hey, going above 150,000 for this cycle, which in our end also has not ended. And yes, this was somewhat of a bear market scenario in between, but also flat over the year. So it's not the traditional 12, 18-month bear market trough. But on that front, we definitely say, well, it makes sense roughly also from fair value extensions. I mean, we explained that in detail and in great depth also in the Outlook report, right? But looking at general valuations as of today, which are true on-chain fundamental valuations implied for Bitcoin, fair value is already at around 120.25, and this fair value was already traded at plus minus a 10% band for the past 2 years for Bitcoin, even very closely. And even if we go by that parameter, it's very likely that the price above 150 is almost a given next year. Beware some gray or black swan in the economy, of course, and then hitting somewhere around 180 to 200,000 for Bitcoin as a cycle peak, as a general scenario. And for ETH, that story is not much different. I mean, we're currently trading 30% below what we have in terms of fair value on-chain cost basis and values implied. We would currently trade at around 4,500 for ETH, but we're yet just at 3.3K. And also there we see, I mean, that's maybe one target that we would revise a little bit to the downside, and that's not because fundamentally ETH is worse or weaker now, right? We set that target of 10 to 13K, I think, almost 2 years ago. And here we are, right? And then it's always a scenario of, or narrative of ETH being more or less a stable coin, right? There's a timeline over 4 years, and somehow we always hit 3K throughout the past 4 years. But also there we see that it's easily going to extend into the 8,000 to 9,000 range for Ethereum throughout this cycle. And that's even backed up by overarching interest that's in favor of Ethereum, even in terms of ETF flows, for example. I mean, institutional players overweight Ethereum more by 3x in terms of the factor compared to a market neutral or market cap weighted beta neutral allocation. So the appetite is certainly there to push ETH also higher.
So they are demonstrating some conviction already. By the way, you said like they are undervalued. Tom Lee just recently framed it as grossly undervalued.
Grossly.
But he also thinks that ETH is going to 65K in a couple of months.
Yeah.
In a couple of months?
Yeah, couple of months.
Yeah, I mean, very
Bitcoin
bold call. I'm not sure about that, but good to see that they're like very like
even bigger
fundamentally
bulls.
like very strong bulls. Yeah, we are not the lone bulls, the sole bulls in the industry. How about you? I feel like you're not a little bit less constructive on 26.
I like to be on the contrarian side of the market mostly. And what I mean with that, I mean, I spend a lot of time on X and in various like Discords and Telegram and talk to a lot of people, and whenever everyone has the same opinion, I always get a little nervous. So when I think back to last year, everyone was like really bullish. Also, when you look at all the outlooks, I mean, 150, 200K calls for Bitcoin were basically the norm. Yeah, everyone was like expecting this. Now
direction was correct.
Yeah.
Though.
No, of course. And I mean, fair enough. When I look around now, I feel like, especially in the retail side, a lot of people are not really sure whether 26 will be bullish. So that kind of makes me bullish.
I just wanted to say, because in my echo chamber, everybody's bearish.
Yeah. I mean,
really. And maybe remember like one call we had with Andre a couple of weeks back, where I said actually everything is like kind of looking quite bullish. The only thing that makes me a little bit nervous is that everybody thinks so. Yeah. That everybody like sees Q4 as like being strong. And now it turns out, you were better go like on the opposing side, kind of. It's kind of like I agree with that. Like it's usually a red flag if there's like the consensus is too strong in one direction. And I feel currently it's more skewed towards the bearish side.
Yeah, I was just thinking about this today. When I think back to 2017, for example, like we all were like 17 or 20, we were all so bullish, and like the big banks and financial institutions, most of them were like, no, crypto, rat poison and stuff like that, you know. And now, today, all the small guys are like, I don't know, man, maybe we should trade stocks, I don't know about crypto, maybe it was all a scam. And the big financial institutions and banks are like super bullish right now. So it's just, it's a really...
upside down.
We are in an interesting spot here, and I mean, I was just thinking about this with the whole tokenization of all stocks coming on chain and everything. There's just so much stuff that you can trade, and there's not enough liquidity for everything. So I mean, I feel like I'm pretty convinced that there's a lot of potential for a lot of good projects and coins, but also I feel like a lot of old coins, a lot of projects
that feel grossly overvalued.
Yeah, I mean, there's like a huge part of the market that, in my opinion, also doesn't deserve to like just go up next year.
Yes,
so
I
feel like
agree. Yeah.
Asset selection will be
it's
key.
part of maturing a maturing market.
But you need to adapt. You need to adapt and
maybe from like the price prediction and all this type of sentiment was not really shared by the old coin holders, right? Because in that regard, 2025 was generally speaking a bad year. How many alts actually outperform or even get close to all-time high, right? So if we are talking about those small guy, those basically have their bags full of alts coin, and then 2025 was a bad year, definitely.
Not if you held Ripple or Zcash. I mean, there were some.
Yes, but we are talking about
large caps. Yeah.
Yep. In the previous cycle, there were always a wave that somehow bring up almost everything, right? During this year, there were only spikes, isolated spikes.
I'm not sure if we have like such a moment again where like the tide lifts all boats in crypto. I feel it might be a little bit more selective. One part of the outlook is also that we expect that there's some form of tug of war emerging, right? We do feel, so overall I'm very constructive. Fundamentally, I think like it's very, I don't know, but it's hard to get rid of my inner bull kind of as well.
But if not now, then when, you know?
No, and I'm on the time frame, I'm not that concerned at all. I feel fundamentally, if you just take what Bitcoin and ETH does and look at what's happening on the global financial landscape, there's so much to be concerned about, the entire debasement trade. Just the fact that they keep devaluing the money, and this will only accelerate. Then you have AI at some point. They can only transact with, so maybe even stablecoins at some point will be, because there's this saying with the dollar is the worst fiat currency except all others, you know. So maybe the sound currencies are outside of fiat currencies, and stuff like that makes me quite constructive. Then maybe on this tug of war theme, we do have next year, we believe there's the second big act of ETF flows, because a survey from Schwab recently indicated across 2,000 investors, cryptocurrencies they plan to allocate in cryptocurrencies is what is second highest ranking, closely tracking US equities and on par with bonds. And bonds have 45% of the AUM, crypto just 1%. Then we know Vanguard, the long-term holdout, always hostile, is now opening up to crypto. It's 8 million people. Then Bank of America unlocked their advisors now to tap into crypto. It's another multi-trillion pool of assets. Retirement accounts with the executive order, another pool of 9 trillion assets. I think we will, the institutional flow, I expect these to anchor the crypto markets really quite strongly. And if you then on top have some retail reflexivity, you know how things can turn. Gold moved in a matter of 1 week, the entire market cap of crypto, or maybe even within a day. I don't remember. If gold can pull this off, I don't know. I feel like we have quite some tailwinds, to be honest.
So you feel like 26 could be the blow of top year for crypto?
No, maybe not. But it's hard to do price targets. Usually you're always wrong. But I would say I would agree with Denis. I think the range we are targeting for next year is very reasonable, and it's for me more likely that it surprises to the upside than to the downside this year. I think 26 might be the exact opposite. Maybe it surprises to the upside, catches up to other asset classes, because there will be a moment for crypto again, and fundamentals are stronger than ever before. Like, seriously. Yes, maybe gray or black swans. I know, for instance, on the geopolitical side, I just read an article yesterday in Venezuela. It's quite dicey right now.
It has been for a while.
Yeah, but it's like, and it's getting worse and worse. And now, like, they're even capturing, like, what was it, oil ships and stuff like that. So it's quite, I don't know. It might be like an area that induces the next big conflict. Maybe.
Could be, yeah.
Conflicts historically mean printing, because someone's got to pay the bill.
Yeah.
So
maybe.
I mean, even in TradFi, there's this long history of buying the invasion, it's literally called, and on average, the forward return post-crisis or a new geopolitical conflict is positive, going a few weeks out already. So whatever crisis there are, ironically, it's same old story as you mentioned initially, right? Debasement is inevitable, and it will happen for one reason or another.
Yeah.
But at the same time, we also know it's inevitable long-term that markets or debasement hedges will go up in price subsequently.
Good time to quote Lynn Alden again, nothing stops this train. So,
So, to your view, the dark clouds of AI, I mean, every time NVIDIA has to announce...
that's also a big problem,
Every time they have to announce it, it's even skyrocketing revenues, or the market is going to tumble like 10%.
Yeah.
I don't know if it's sustainable on the long run. I mean, sooner or later they will disappoint the expectation. I mean, it's a very high standard, right?
Yeah.
Or like all the valuation of the currency that you mentioned. I don't know. I don't feel so confident as the three of you. I think this type of dark clouds will generate a rain sooner or later. I'm not expecting to be big, but
I think unfortunately it will like have an impact on crypto because it's just risk on. I think a correction is overdue, especially if nothing of that huge AI potential materializes. I feel like since 1 year at least, we are like kind of stuck with the models, right? There's not a major progress. It can still not replace us. So that's nice.
Speak for yourself. I feel to be replaced in a couple of weeks. No, I'm joking.
Don't worry.
But
no way.
There have been some progress, but still everything is for free. Huge energy demand. I don't know how much can be sustainable, that type of energy requirements. But there are many problems.
But I think if they basically do not meet expectations and there is a major correction in AI, I think like for sure crypto will like echo it to some degree, but it might also be the moment afterwards to decouple, because fundamentally they are not linked, you know?
Yeah, I agree.
So maybe this is a...
But you know how the market is.
Maybe, like unlikely, but maybe.
Regarding
Who knows?
AI, I feel like everyone is talking about the AI bubble. And I just yesterday read an outlook from BlackRock where they basically said bubbles are usually identified afterwards and not while they happen. So
everyone monitoring the bubble.
Everyone is now looking for the AI bubble, and it's basically like as long as everyone is talking about
but precisely that is the problem. Usually that does not happen in bubbles.
No, of course it does.
No, you're not afraid of the bubble.
Maybe even we're not
in
the bubble
but
yet.
Everybody is afraid of the bubble, which is cool. Everybody seems to be cautious and
it's
maybe the bubble will pop.
I mean,
if that is gone and everybody is like, no, there's no bubble, then it's...
That's what I mean with that. Yeah. I mean,
okay.
That's what I meant, exactly.
Because right now, and also there was one metric I found interesting. If you compare the .com bubble, like how much is invested on a relative basis compared to the GDP. it's basically way smaller than what happened during the dot-com bubble.
Yeah.
Okay.
Because the GDP is now so much higher and so forth. So that's
and even relative valuations aren't as stretched, considering that the economic output and actual cash flow and revenue that they do generate is substantially higher. I mean, back then it was unprofitable companies.
Let's say also that back in the days during the dot-com, you had your activity and then you add the email signature at the end, and your price went up just because you
yes,
you
it's
just
like
New website.
You just
in 2017.
exactly, but maybe you
was it Hewlett Packard or something.
Maybe you just
Long Island iced tea was also blockchain branding suddenly.
Maybe you were selling potatoes or like groceries, so nothing linked.
We're not there with
we
the
are
AI
not
yet.
Year that, but if we were year that, then I would be saying I'm selling everything and going to Bahamas for the following year.
And grow potatoes.
But the point is, AI is new, and sooner or later there will be, let's say, a hard check, right?
Yeah.
From the market, and that unfortunately will affect the overall market. Not.
I think for the time being we will remain running on this hopium to break into AGI or ASI, because that's what everybody like chases right now, and that would be like an insane breakthrough. That's why we are running so hot. The potential is just like unimaginable, I think. Guys, we are running out of time. I think it was a super good session. To the audience, we seriously, we only scratched the surface of the Outlook. Please check it out. We will have some physical copies as well. Reach out if you want some. Otherwise, it's available digitally. We put in a lot of effort, so please read it. Provide some feedback if you want. And with that, thanks everybody that contributed. Also to Wolfgang, who could not join us, who is in Abu Dhabi right now at Solana Breakpoint, doing important work on ground. So thank you, Wolfgang, for helping us. And thank you, Luca, Denis, and Matteo for making this just another outstanding report. And with that, see you in the next episode.